So guys, what about B, C, and D? So check if you have got these answers. These must be the answers. So 19,750 we have taken rupees in thousands. So there might be rounding off. So this is 19.750. For us, it should be 19.8. Nothing wrong if you're doing problem in thousands. You can do that. Okay. And then it should be 25.6. It should be 27.05. It should be minus 3.75. How many of you got all correct answers? Tell me now. Okay. In the chat box, type I, me, myself, something like that. Raised hand. Okay. Anu, okay. Then very good. So many of you. Anu got it. Muskan got it. Ginny got it. Visalakshi got it. Anjana got it. Dilshida got it. Vinay got it. Muhammad Hashim got it. Very good. So Ashwati got it. Excellent. Excellent. So we are going to next question. Ashwati, can you read this question for me, please? Ashwati, madam, read this question, madam. Or anyone? No problem. Please take care. Afra. Afra, can you read this question? Or anyone else? I want someone to read this question fast. Sandra, yes. Sandra is asking, can I? Yes, we want voluntary people like you. Hi, Sandra, how are you?
Fine, sir. Okay.
I like this transparency. I like this transparency. One student is saying, I have TV running behind me. So I cannot read. Very good. Because India-Pakistan match, no? No, I also could have done that. I also could have put some device here. Yo, I'm an idiot. Huh. Sorry. Afra, no problem. No problem. Just joking. Okay. Sandra, please read the question.
Okay, sir. Suppose we have three projects involving discounted cash outflow of rupees 5,50,000, rupees 75,000, and rupees 1,20,000 respectively.
Okay.
Suppose further that the sum of discounted cash inflows for these projects are rupees 6,50,000, 95,000, and 1,30,000 respectively. Calculate the desirability factors for the three projects.
So what is desirability factor? They're asking you to calculate desirability factor. I don't know what it is. Desirability factor means profitability index. I told you already. Profitability index is also known as a desirability factor. It is also known as NPV index. In CMA books, if you're doing CMA India, you open book, they'll not ask you calculate profitability index. They asked to calculate NPV index. So first time, even when I was studying as a student, I'm like, NPV index, what is this? Simple, profitability index. Okay, and they also call it present value index. So there are different names, but simple. So now, can someone tell me what is the formula for profitability index or desirability factor? Can I say profitability index is equal to present value of cash inflows divided by present value of cash outflows. Is it right? Present value of cash inflow divided by present value of cash outflow. Okay, so I do not want to do anything. No waste of time. There are three projects. I want three answers in 1 minute. What is the time given to you? 1 minute. Your time starts now. I want profitability index of project 1, project 2, project 3. You have to do. Hello, answer. Sir, 1 minute is not over, sir. So I'm getting answer 1.18, 1.18, 1.18, 1.18, 1.18. Okay. I assume this is first project. Then what about project 2? Oh, 1.18, 1.27, 1.001. Excellent. So check you got these answers. Excellent. Very good. So let me write it like this. Okay. Particulars. Problem number, I don't know. Project. Here I write A, B, C. Then I write present value of cash inflow. Then I write present value of cash outflow. Then I write profitability index here. Okay. So for project A, it is 6,50,000, 5,50,000. 6,50,000, 5,50,000. For project B, it is 95,75. 95,75. Ambika is saying 5. What is 5? I did not. Oh, problem number 5. Okay. Okay. Very good. Then 1 crore 30,000, 1 crore 20,000. 1 crore 30,000. 1 crore 20,000. Correct? No. Profitability index is, there is a reason why I am solving this problem on the board. Okay. So these are the answers you got 1.001. So we'll round off these things. So these are the answers you got. Okay. ICA should have done something better here. Okay. Look here. NPV, do you agree with me? If I say NPV is this, do you agree with me? NPV is present value of cash inflows minus present value of cash outflows. So these are the NPVs I got. Do you agree with me? Now, ICI did some, small mistake. ICI did some small mistake. Let me change the number. Here, instead of 1 crore 30,000, I'm taking 1 crore 1,30,000. 1 crore 1,30,000. 1 crore 1,30,000. I changed the number. ICI could have done this. I changed the number. So now ignore PI. Ignore PI. Imagine if you do not have PI here. Now tell me from NPV point of view, which project should be accepted? If you blindly go with mathematics, my dear friend, this is the problem with technology or, mathematics or artificial intelligence or formulae. If you blindly go with what theory told you, you would have chosen project C because it has highest NPV. But don't you think it is foolishness to accept project C? Don't you think it is foolishness to accept project C? Why? You are just getting 10,000 more compared to project A, but how much more you are investing? Now you tell me, invest 5,50,000 and get 1 lakh NPV. Invest 1 crore 20,000 and get just 10,000 more. Don't you think it is foolishness to accept project C? Now you tell me, will you accept project C in this case? A is far better. That is the reason, my dear friend, this is important. That is the reason this is the importance of PI. PI is telling you, idiot, don't go with NPV in this situation. PI is telling you, B is actually better or CA is better. B is far better. Why? Because with very low amount, you are getting 20,000. So what is the meaning of PI, What is the meaning of PI, NPV gives gives net present value of the asset as a whole. Profitability index gives you net present value for each rupee invested in the asset. Oh my gosh, this is how you should understand the subject. Profitability index give you NPV per each rupee invested. So invest 1 rupee, get 1.182. Oh, invest 1 rupee, get 1.267. Oh, invest 1 rupee, get 1.011 per rupee calculation. Present value per rupee calculation. Okay, technically it is not NPV per rupee, it is present value of cash inflow per rupee. But if you subtract 1, after this decimal 182 is there, no 0.182, that is NPV per rupee. 1.182 is cash inflow per rupee. 0.182 is NPV per rupee. So when you look at this PI, you should not accept C, you should not accept A, you should accept B, isn't it? So this good concept, this excellent concept, ICI might have explained by, changing numbers of this third project. But in the old scheme also, this is there. In old syllabus also, this is there. In new syllabus also, it is there. I don't know what is the intention of giving this bakwas question to students without explaining the importance of PI. Chalo, anyway. Oh, they have given, it can be seen in absolute terms. This is because outflow. They have given profitability index helps us in ranking various projects. Very good. Since PI is an extension of NPV, it has same advantages. Okay, very good. No problem. So shall we go to next question, guys? Shall we go to next question? IRR. IRR. So write down the formula. What is formula for IRR? IRR is equal to lower rate plus NPV at lower rate divided by NPV at lower rate minus NPV at higher rate into high rate minus low rate. So basically you'll take two rates. Probably one could be 10%, one could be 20%, something like that. You calculate two NPVs. One should be positive NPV, one should be negative NPV. In between these two, zero NPV exists. But I will tell you one thing practically. Between two positive NPVs and between two negative NPVs also, you can apply this formula, you can still get IRR. Interesting. So it is not necessary that one NPV is positive, one NPV is negative. If it is there like that, it is ideal situation. Pavan sir, I have got two NPVs, Pavan sir, 10% positive NPV, Pavan sir, 15% positive NPV, Pavan sir. Can I calculate IRR? Yes. Same formula. But if one is positive, one is negative, it is ideal. In global textbooks, like if you are doing ACCA or CPA, and I have seen some of the universities in Europe, they tell take two NPVs and calculate. They never say one NPV should be positive, one is negative. But in ICA textbook, if you follow Indian textbooks, they say preferably one NPV should be positive, one NPV should be negative. So we follow that. That's it. Okay. Now, is there anything which you need to remember here? Is there anything very important here? Is there anything which is important here? This is important. Can someone tell me why this is important? Because in many cases, higher rate NPV is there, no? That will always be negative. When it is negative, you are subtracting negative number. That means practically it is, this should be, this is plus. You understand my point? So a positive number minus of negative number means you should add that to. So, shall we continue? Okay, I want someone to read, but sir, someone is saying, sir, it is showing some difference in answers if random rates having big difference. Yes, my dear friend, it is not because one is positive, one is negative. It is not because both are positive or both are negative or one is positive, one is negative. It is because of the difference between high rate and low rate. Ideally, the difference between high rate and low rate should be 1. So what you need to do, you need to calculate NPV at 10. If it is positive, you need to calculate NPV at 11. If it is positive, you need to calculate NPV at 12. If it is positive, so you need to calculate NPV increasing rate by 1 till you get negative. But for practical purpose, what we do, we calculated NPV at 10%. That is positive. Calculate NPV at 20%. That is the reason, because of the difference, spread, because of the gap between high rate, low rate, there will be some difference, but still it is fine. My answer is, say, for example, my answer is 16.24. Your answer is 16.31. Both of us, we got correct answers. No problem. You understand? Yeah, you will get full marks. You will get full marks. You will get full marks. Sir, I don't trust ICAI. They will deduct marks for this, sir. No. Okay. Chalo. Question number 6. Oh, wait. We'll come back to question number 6. Question number 7. We'll come back to question number 6. Question number 7. Can someone read this question for me, please? Sandra, read question number 7. Or anyone. Or I only read. Why wasting time? Hello, I will read. Calculate the internal rate of return of an investment of 1,36,000, which yields the following cash flows: year 1, 30,000, year 2, 40,000, year 3, 60,000, year 4, 30,000, year 5, 20,000. This question, if I remember, in existing scheme, this question is MIRR question. MIRR. Answer should be 9.57% MIRR. This question's answer is 9.57, but that is MIRR. How come they gave IRR? Maybe same question they wanted you to calculate IRR. Probably after some time, same question will come for MIRR also. I don't know. We'll see. So basically, they gave you year 1, 2, 3, 4, 5, but they did not give you what is lower rate, what is higher rate you need to use. In some problems, they tell you take 10 as lower rate, take 15 as higher rate. In some problems, they'll not give. Visalakshi is saying MIRR question only, sir. No, in old syllabus, it is IRR. No, in old syllabus, it is MIRR. Since when I am teaching, ma? Or I'll show you with 9.57 also. Let me take 9.57. Or let me take MIRR. See this question. Investment 1,36,000, 30,000, 40,000, 60, 20. This is MIRR question. And finally, you'll get 9%. They're rounded off, but actually it should be 9.57% somewhere. Where is that? This is the question. So maybe they have given same question for, IRR and MIRR. They can get no problem. So where are we? Which question we are in? Go back. This question we are in. Okay, chalo. So they have not given IRR and MIRR, sorry, they have not given lower rate and higher rate. Let us take some random rates. Okay, first they have taken 10%. Then probably they might have taken 12%. 12% because they know IRR is somewhere between 10 and 12. We can do it with 10 and 15 also. Shall we do it with 10 and 15? Why do we follow ICA? 10 and 12 they have taken. We'll take 10 and 15. Okay, so calculation of, put the heading, problem number. I don't know, problem number so and so. Calculation of IRR. Or you can put calculation of NPV at 10 and 15% and IRR. We are saying that I'm calculating NPV at 10%. Then I'm calculating NPV at 15%. Then I'll calculate IRR. Here, 0, 1, 2, 3, 4, 5. Okay, then cash flow after tax will take, please wait. Discount factors at 10% will take, discounted cash flow will take, discount factors at 15% will take, discounted cash flows will take at 15%. Okay, so this should be our pro forma. Okay, just wait for 1 minute. After that, you can do. So CFAT, how they have given? Outflow is 1,36,000. So minus 136,000. Okay, then 30, 40, 60. 30, 40, 60, 30, 20. Can someone help me with the discount factors at 10%, please? It is 1.909, 0.826, 0.751. Oh, hello. Tell me. What is the next one? 683, 621. Very good. 683, 621. Okay. Discounted cash flow is equal to this into this. And is equal to sum of. So I got this is my NPV. This is my NPV. Now discount factors at 15%. Can someone please tell me one? Hello. 0.869. Okay. Next. 0.756. Okay. Next. 0.657. Okay. Next. 0.572. Okay. 0.497. Very good. Thank you. So take cash flow, multiply with this. Now look carefully. Some people, by mistake, what they do, they'll take these numbers and multiply with the discounted, discount factor. They'll take this column, DCF. Why? Exemption. Okay, so you need to do it like this. So when you are calculating DCF, remember you should take original cash flows into 15% discount factor. You should not take this DCF and multiply with this factor. You'll get wrong answer. You understand what I'm saying? So now we have two NPVs. One is positive, one is negative. What we are supposed to do? We need to calculate IRR. Okay. So tell me what is lower rate? 10 plus what is NPV at lower rate? 2280 divided by 2280 minus of minus 13170. 13170 into 15 minus 10. Can someone simplify this and tell me what is the answer? Hello. Can someone simplify this and tell me the answer? 0.107. 10.73 seems to be correct answer. 10.73. 10.73. Excellent. So how many of you understand this question? How many of you are able to see this question? How many of you are able to solve this question? You understand 10.73, very good. Basically saying okay. Vinay, me, very good. Super. Dilshida, very, very good. Anu. Ginny is saying yes. Okay. Now, if you are doing ACC or CPA, it is a CBE, computer-based examination. Then what they do, is equal to IRR. Nice now. For them also, they'll give the same question for 5 marks only. For us also, 5 marks only. And one more interesting thing I'll tell you. In the exam, they'll give this formula also. In the exam, they'll give this formula also. You may use this formula to calculate IRR. Because they say it need not be memory game. You don't need to read it. You can just look at it. And if you know how to put numbers in that, it is fine. Or you know the formula, how to calculate the formula in Excel, they're okay with that. But of course, that Excel, whatever they give in the exam, will not work with all the functions. They will restrict some of the functions. But having said that, it is still computer now. I asked the country head of this ACCA education in India once, you are giving calculate EOQ and you are giving the formula. Calculate EOQ, you are giving the formula. EOQ is equal to, and then you gave a note. A refers to annual consumption. In the problem, sometimes you will be given monthly consumption. Don't forget to convert monthly consumption into annual consumption by multiplying with 12. And calculate EOQ. This is the question, 5 marks. Like what? She said, Pavan sir, it is not a memory game. If they know how to put the numbers, it is fine. Because anyway, when they start working, they will have computers, laptops and all, no? Why do they need to calculate everything using brain or using memory? But ICA is not like that. Okay. So shall we go to next problem? Question number 7 is over. Now, one student will ask, Pavan sir, yes, it's a practical approach. Correct, Muskan. One student will ask, Pavan sir, instead of using 10 and 15, is there any way where I know what is the higher rate and the lower rate? So I have taken lower rate 10, higher rate 15. But this is random choice. Randomly, I took 10 and 15. Is there any way where I know what is the high rate and low rate? Yes, but it is possible only if cash flows are uniform. So if cash flows are uniform, then there is a possibility. If you look at it, do you remember you have calculated for company, for project A, B, C, D, one NPV before the break? And after the break, we saw the answers. So in that first question, if you remember, first project, if you remember, every year 50K. That is what we call projects with uniform cash inflows. Project with uniform cash inflows. For those kind of projects, calculating IRR is easier because there is a way you can identify high rate and low rate by using payback period. Step 1, calculate payback period. What is payback period? Payback period for these projects is investment, initial investment divided by annual cash flow. Now you'll get one number. Now go to present value annuity factor table, present value annuity factor table, which will be given to you in the exam. Don't worry about it. Go to present value annuity factor table and search for this number. It lies between two rates. Those two rates are to be taken as high rate and low rate. So what are we talking here? Pawan sir, how can I identify low rate and high rate for calculating NPV, which will be used to calculate IRR? That is the question. Answer is, if the project cash inflows are uniform, there is a technique. If the project cash inflows are not uniform, no technique, you have to do random guessing only. You understand? Now, if you look at the previous question, question number 6, A Limited is evaluating a project involving an outlay of 10 lakhs, resulting in an annual cash flow of 2,50,000 for 6 years. So don't you think cash inflows are uniform? Don't you think cash inflows are uniform? So can you calculate and tell me what is the payback period here? Guys, can you calculate and tell me what is the payback period here? Hello, hello, hello. I want to answer fast. 4. 10 lakhs divided by 2,50,000, 4. Now take this 4 and go to present value annuity factor. Present value annuity factor table. So, investment decisions, do they have present value annuity factors given in this? I do have, but I don't know where do we have in. They should give present value annuity factors somewhere. No. Chalo, anyway, that is how we need to calculate. Okay, now come to problem number. So this is 6th question. Okay, look here. So this is 4, right? Now we shall search this in present value annuity factor table, where you can see that this 4 lies between 4.111 and 3.998. So this 4.111 is corresponding to 12% rate, and this 3.998 is corresponding to 10% rate. So you will take 12 and 13 as low rate and high rate to calculate NPV. Thereby you calculate IRR. But if you look at it, 4 you want and 3.998 is appearing at 13%, which is equal to 4. So 13% will be your IRR, or maybe 12.98, 12.99 something. So when you do everything, they got 12.98%. Okay. So do you know how to see this present value annuity factor table? On the left hand side, you know, this vertically, they will give you year 0, 1, 2, 3, 4, 5, 6. Horizontally, they will give you rate, discount rate, 1%, 2%, 3%, 4%. So when you get this 4, you need to search first, you know, your left hand, go and scroll in year. The life of the project is 6 years. So go to year 6 and then move horizontally. At 6 years, where can I get 4? Payback period is 4. So search 4, 4. You will get it in between two numbers. Two numbers corresponding to that two numbers, there will be rates above horizontally. That two are low rate and high rate. You understand this? Okay, very good. Very good. So quickly, we have maybe another 5, 6 minutes. Shall we see few more problems? Maybe probably we'll not solve everything. We'll not solve everything, but we'll just read and try to understand. If there are any intricate points in the question, I will tell you. Okay. So can someone read this, please, now? Who wants to read? Sarah, can you read this question? or I do it myself? I have also one more, Shafina PS. Anyway, I'll read. Don't worry. So a company proposes to install a machine involving a capital cost of 3,60,000. Okay. The life of the machine is 5 years and the salvage value at the end of life is nil. Okay. So can you calculate depreciation? 3,60,000 divided by 5 years is depreciation. It should be some 72,000 something. The machine will produce net operating income after depreciation. So they have not given cash flows. They have given profit after depreciation. That means profit before tax. So they gave PBT 68,000. They have given profit before tax 68,000. Okay. Then they said tax rate is 45%. Okay. Tax 45% is equal to this. Oh, sorry. In 45%. Then PAT is this minus this, profits after tax. Add back depreciation. Depreciation we calculated 3,60,000 divided by 5. 72,000. So CFAT is equal to this number plus this number, 109,400. Correct? So guys, do you understand this CFAT calculation? Do you understand the CFAT calculation? Simple. Okay. Now, the net present value factor for 5 years. What is net present value factor? PVAF, present value annuity factor. For 5 years is given as under 14% 3.43, 15% 3.35, 16% 3.27, 17% 3.20, 18% 3.13. You are required to calculate IRR. Now you tell me whether cash flows are uniform or no. Cash flows are uniform or no? Yes. They did not give 5 numbers for 5 years. No. They said the same number. That means cash flows are uniform. So when cash flows are uniform, what is step 1? Calculate payback period. Can I say payback period is equal to initial investment 3,60,000 divided by 1,09,400? That is equal to, can you calculate and tell me? 3,60,000 divided by 1,09,400. 3.29. 3.29. Now you search where this 3.29 is. Now you can see it here itself. They have given table here. 3.29 lies between, can I say 15 and 16? 15, 3.35. 16, 3.27. I want 3.29. 3.29 lies between 15 and 16, no? So it lies between 15 and 16. So 15 is my lower rate. 16 is my higher rate. Now calculate two NPVs, calculate IRR. So how do we calculate NPV? Calculation of NPV where project has even cash flows. NPV is equal to cash flow into present value annuity factor N comma R minus investment. Simple formula. So instead of using this discount factors every year, I'm using present value annuity factor. So at 15, it becomes 109,400 into. At 15, what is the present value annuity factor? 3.35. 3.35 minus 3,60,000. Can someone tell me how much it is? This is at 15%. Similarly, at 16, this is 1,09,400 into 3.27 into 3.27 minus 3,60,000. Can someone tell me what is NPV here and what is NPV here? It is 6,490. Excellent. It is. The second one is 2,262 minus 2,262. Okay, now put this to in interpolation formula and calculate IRR is equal to lower rate 15 plus NPV at lower rate 6,490 divided by 6,490 divided by 6,490 plus 2,262 minus into minus plus into 1. 16 minus 15. So can you tell me how much it is? 15.74%. That's all. This is how you calculate this important model. This is very important question. Question number 8. Okay, now look at other problems. They calculated same 15%, 16%. Whatever we have done as it is same 15.74. Acceptance rule already we have studied. Now, guys, look here. Next few problems. MIRR we'll discuss tomorrow. Don't worry about it. Okay, now MIRR we'll do tomorrow. See question number 10. Suppose there are two projects A and B. Cash flows are given. Year 0, 1, 2, 3. Project A cash flows, project B cash flows. Assume cost of capital 10%. Calculate NPV IRR and identify which project should be accepted. Don't you think it is LKG question? Can you do this question as homework? 3 years cash flows are given. Two projects are there. You need to calculate NPV and IRR. Okay, easy question. Then next question also is easy. Next 2-3 questions will be like that. Suppose ABC is considering two projects X and Y for investment. Cash flows are given. Okay. Identify which project should be accepted as per NPV IRR. Can you do this problem also? That's it. That is all for the day, ladies and gentlemen. Okay, we'll see some more questions, maybe probably little more advanced questions tomorrow. Okay, any doubts till whatever we have discussed?